Learn to retire earlier rather than later. Our legal disclaimer: we are not financial advisors. The information being shared should only be used for educational purposes only. We encourage you to make your own decisions based on your own findings. The information being shared should not be used to make any guarantees. Important questions to ask. What do you do for a living? Are you planning to retire? And if so, at what age? How much money does the average person need to have every month to retire comfortably? Well, according to national statistics, the average person would need about $5,000 a month. So if you're to multiply that by 12 months, you would need to have $60,000 a year. And if you retire at age 65, the average person lives about 15 years after 65. And if you multiply that 15 years, that would mean you would need to have approximately $1 million in your account. How far are you from that $1 million? Well, let's look at the options you have to create that monthly income. Most people will say they have a 401k, IRA, life insurance policies, real estate, etc. If we look at real estate and life insurance, that normally requires a lot of money to start, or even a lot of time. 401k and IRAs are not a much viable source of an option as well, because normally the only ones who benefit from those options are the brokers, because they get paid whether they make you money or not. Let's use this example. If you earned 50% this year and lost 50% next year, where are you? Most people would say back to square one. But in reality, you're in a worse position. With an example of just $100 and making 50%, that would give you $150. But if the following year you lost 50% of that $150, you're now down to $75, which means you actually lost 25% of your original money. And it takes approximately 10 to 15 years just to recover that 25% loss. The wealthy have multiple sources of income streams. Studies show that the wealthy have an average of 7 to 9 income streams, although the average person normally has only one source of income stream, which is their job. And even if you're one of the very few who enjoy your job, wouldn't it be more rewarding if you didn't have to depend on the income from your job? You don't do it because you have to, it's because you just love to. And you have other sources of income that can take care of your lifestyle. The wealthy understand banks don't keep your money in the bank. They put your money in low risk, high return investments. They must be low risk because they need to have your money available for when you request it. But as they're doing these investments, they pay us or you simple interest on your money. Yet the bank earns compound interest on your money. What is compound interest? Well, let's look at the power of compounding. Let's look at this example. What option would you take? Option 1, take $1 million today. Option 2, take a penny that doubles in value every day for 30 days. Most people will choose option 1, although option 2 is a far more lucrative option. See, banks put your money that you put into your bank accounts into hedge funds, where brokers make multiple low risk trades using small amounts of everyone's bank account and making the bank high returns and earning compound interest, and yet giving you low returns and paying you only simple interest. Banks have been making lots of money from your accounts, earning compound interest no matter how much money you have in the account, and paying you only simple interest. Now you can earn that compound interest on your own money. It doesn't require a lot of money to make a lot of money when you're earning compound interest. So, how can you do what banks do with your money and make compound interest for yourself? Well, let's introduce you to our company, Commercial Investment Business Partners. Just like banks, we earn compound interest using both the expertise of top brokers in the world who make low risk, high return investments in the Forex and cryptocurrency platforms by also using artificial intelligence, better known as robots. See, CIB puts the money you put into your PAM, also known as Percentage Allocation Management Module accounts, into hedge funds as well, where brokers make multiple low risk trades using small amounts of everyone's PAM accounts and making high returns, earning compound interest, and giving you also high returns, paying you compound interest too. As a matter of fact, unlike banks, for the past 3 years, CIB has been paying all their members 3% a month interest, which compounds every year. Now, we must say past performance does not predict future earnings. If you doubled your money every 2 to 3 years, would that be good? Of course. Well, let's compare banks versus CIB. If we use an example as $500 that you would have in your bank, how much money would you have in 2 years, 5 years, 10 years, or even 20 years? And what if instead of having 500, you had 5,000, 50,000, or 100,000? Well, first of all, you need to know what interest you're getting from a bank. Most banks are paying very, very little simple interest. But let's just say in this example, you were able to find a bank that was paying 3% APR, or annual percentage rate. What a joke, right? Good luck trying to find one that's paying that much. But in this example, that $500 at 3% APR would give you only $530 in 2 years. In 5 years, you only made an extra $75 on that 500. 10 years, $150 more. And in 20 years, a whopping $300 more on that $500 initial investment. Well, let's look at 5,000. 5,000 is just adding another zero, which means an only extra zero on this example as well. 5,000 in 20 years would only generate you $3,000 more in your account. 50,000, no better result. It's still only 30,000 more in 20 years. And again, if we use it 100,000, you would have an additional 160,000 after, or not additional, 60,000 extra in 20 years. Now, if that wasn't glooming enough, let's look at the difference of what CIB would do. CIB with that same $500 in 2, 5, 10, 20 years, okay, that 500 at 3%, not annual, but monthly interest, would give you, would double your money in 2 years. In 5 years would nearly make it 5 times more. 10 years and 20 years, you can see almost $250,000 in 20 years with just a $500 account with us. You add a zero to that, and again, we're looking at some serious numbers. 20 years, you're talking about over $2 million. With $50,000 in the account, you're looking at $23 million. And at $100,000, you are looking at almost $50 million with the same amount of monies, same amount of time, just a huge difference in the interest. Which makes more sense? Sense. Obviously, CIB. But let's just look at this one other scenario before you make an educated decision. $200,000 with a bank versus with CIB. If you look with the bank, that $200,000 in your first year, if you look at the interest column, you've made $6,000 of interest. And if we keep going down that column, you can see that by 15 years in, you are only making about $9,000 a year on your money. As opposed to looking at what CIB does. CIB, with that $200,000, in your very first year, you see that you've already made $62,000. Now, if you remember, the average person needs about $60,000 a year to live comfortably. So within your first year with CIB, you are already over that $60,000 a year mark. So if you look at the column to the left, which says deposits and withdrawals, you can start taking out $60,000 every year right after your first year. And all you're doing is taking from your interest, never taking from your balance or your principal. At the end, you are in a way better shape. So lastly, let's look at this last screen here. Calculation projection. That $200,000, which made 3% a year for 15 years, only generated about $100,000 in that 15 years, which only left you with about $300,000. If you look at CIB, that same $200,000, from the very first year, you were able to take out $60,000. If you look at there, it says total withdrawals is $900,000. You've already taken out $1 million, almost close to $1 million in those 15 years. But because you were making 36% a year, right, 3% a month, you have made a total interest of almost $1.5 million. You took out almost $1 million of that, which still left a profit of $500,000 plus your initial $200,000, which you started with, which says you still have over $780,000 into your account, and you can still take out the $60,000 or more every single year. So at this point, there's 3 types of people. First type is person who says, we're ready to become a member today, and we welcome you to CIB. Second type of person still has some questions, and that's totally fine. Get back to the person who shared this video with you. Third person is the person who says, this is not for me. And again, we thank you for taking the time to take a look at this. And perhaps you might know of someone who can benefit from such a program. My last question to you is, Which one are you?